afternoon, everybody. Thanks so much for joining us. I'm Sarah Miller. I'm the Executive Director of the American Economic Liberties Project. We're an organization based here in Washington, D.C. that focuses on addressing concentrated corporate power and the threats to our economy and democracy that it presents. Part of our work is focused on trying to support entrepreneurs, small businesses, not only as important engines of job growth and innovation and community well-being, but as really building blocks of a strong and healthy democracy. So we're very grateful that you've joined us in this important conversation today at a critical moment. Today I think we are all kind of really focused on the existential crisis that we are facing in terms of small businesses and entrepreneurs and what the path lies ahead for people who are striving to innovate and anchor communities through our commerce. We are very grateful to be partnering with the ASBC to put this event on and have this conversation today. We're grateful to bring some really terrific panelists to have a conversation about where we go from here over the next hour. Ross Baird, Stacey Mitchell, Thomas Oppel, and Rodney Foxworth. And we're extremely grateful to have a little bit of time from Senator Ben Cardin, who is the senior senator from Maryland, and he's also the ranking member of the Senate Small Business and Entrepreneurship Committee. I don't want to take up too much time. I'd like to go ahead and maximize the wisdom and the talent of this great group of people at a really critical moment in our country, a frightening moment, a moment I think we're all feeling very personally, and that is really kind of a turning point for what our commerce is going to look like in the future. So with that, let me just say that Senator Cardin has offered to take questions after some brief remarks, so you can either put them in the Q&A or put them in the chat, and I will go ahead and present those to the Senator. But with that, let me turn the floor over to Senator Cardin. Thanks so much.
Sarah, thank you very much for everything you do and your organization does for economic justice in this country. So we thank you for all of your work. And I'm very appreciative of the people that are on this call so we can get information out as to how we're trying to deal with the coronavirus. First and foremost, our concerns about public health. I know that in my community and almost every community in the country, there's real concern as to whether we have adequate material for testing, adequate protection equipment for those who need it, ventilators in our hospitals. And that's our top priority, is to make sure that we take care of the public health of the people of this country. About 2 weeks ago, the majority leader in the Senate, Mitch McConnell, came forward with a stimulus package. It was the third under the coronavirus. Democrats objected to that package because it was not focused on workers. We wanted the package to be focused on workers and small businesses. At the end of the day, I think we achieved our objective. As you look over what's in that package, you'll find a very robust provision for unemployment insurance, an extra $600 in unemployment checks, and for extended periods of time. That was one of our key achievements, to make sure that we took care of workers. I worked on the provisions for small business because we recognize that small business is the backbone of our economy. That's where we get job growth, and that's where new opportunities where people have a chance to participate in our economy. So there are 3 new major programs that help small businesses in the package that was passed. Totals about $377 billion, that's with a B, $billion of relief for small businesses. The largest by far is known as PPP, which is Paycheck Protection Program. That will provide up to 8 weeks of salary for small businesses, those under 500 employees, plus some additional expenses for rent, mortgage payments, or utilities. It's done through a 7A loan through a commercial bank, but the loan is forgiven. It's a 100% federally guaranteed loan. It's for very low interest rates, but once again, if you spend the money during the period of time you keep your payroll, you will be able to get the entire loan forgiven. This applies not just to traditional small businesses under 500, but also to self-employed and also to nonprofits. The second program is under the Emergency Grant Authority of the Small Business Administration. These loans are directly with the SBA, so you do go online. You don't have to go to a bank. The SBA will actually grant these emergency loans. But as part of that, we put a provision in for a $10,000, up to a $10,000 grant. So a small business that's desperate for capital right now, money right now, can apply through the SBA and are eligible for a grant up to $10,000. We've been told that these requests will be processed in a matter of days, not weeks, so that if you apply today, you should know by next week whether you'll be able to get the cash that you need. And if you currently hold a 7A or a 504 loan under the Small Business Administration, we have a loan forgiveness for the next 6 months of any payments under those loans, including not just interest, but also principal. So there are 3 new programs that are available for small businesses. We also provided more money for our resource partners, that is the Small Business Development Councils, as well as the Women's Business Centers, will all get additional resources to help you. There are additional programs that are available to all businesses, such as employee retention credits under the IRS or deferring your payroll taxes. If you use either of those programs, you can't use the payroll protection plan. It's a little bit complicated, but we have information on our website. There's also information on the SBA and Treasury's website. We urge small businesses to take advantage. The first program opened today. The banks are processing loans starting today.
Thanks so much, Senator. I want to jump in with a couple of questions while others collect their thoughts and can put questions in the chat. My first question is, we have seen that unemployment is skyrocketing at unprecedented rates. And I think the question that's probably on a lot of our minds is this going to be enough? And I think we probably, share concerns with others that more is going to have to happen if small businesses are going to come out of this crisis, not just alive, but with a platform for thriving and recovering at the scale that we feel like we really need them to. What are your thoughts on kind of where we go from here after the CARES Act, and what new tools or what additional initiatives will be needed to help entrepreneurs and smaller businesses weather this crisis?
Well, we are pretty certain that this is not enough, that we're going to need another package and maybe a package after that. We are already working on the next package. So we recognize that this is a temporary bridge. The payroll protection plan will give you 8 weeks of salary. We are trying for you to maintain your current workforce. We'd rather see small businesses keep their people employed, so you don't have to go back out and try to rehire. You may not be able to find the people that you need. And it doesn't cost the taxpayer any additional money because we're saving on the unemployment insurance. So we're trying to keep people on payroll for the next 8 weeks. That takes us into June. Will that be enough? We don't know. And quite frankly, we expect that we will be working on what we'll call the coronavirus 4th phase, because we passed 3 already. That will include additional help for small businesses.
Thank you so much. Let me ask one other question for you. It seems from us as an organization that looks at, concentrated economic power and kind of the most dominant, largest corporations in our economy, that it's easier for those sorts of institutions to get access to capital. And it's a little bit more difficult for smaller institutions to navigate the process for getting the kind of lifeline that they might need. So we've seen some reporting today that there are difficulties with the banks who are responsible for extending these loans, and that small businesses are encountering some confusion in terms of accessing these important programs. So can you talk just for a little bit about how we can work to prevent kind of the ability of these different size institutions to access capital from exacerbating existing imbalances in economic power that we're already seeing and concerned about in the economy?
I share your concern. We put language in the CARES Act that makes it clear we expect the commercial institutions that are participating in these loans to make them in all communities, including underserved communities and all size, including the very small of the small businesses. So we put that in the bill, but I share your concern. Obviously, the larger small businesses that have established relations with banks are going to have an easier time accessing these loans. we have opened up to just about any financial institution the ability to write these loans under the first program, including credit unions, including community banks that are currently not writing 7A loans. So we hope there'll be a significant increase into the communities, but we're going to watch this very closely. I already heard today about an abuse by one of the large banks that says that unless you have a credit card with us, we're not going to write the loan. That's outrageous. We had another large bank that said unless you have a checking account with us, we're not going to write the loan. That's just redlining by name. And we're going to go after those institutions and make it clear that we expect them to make funds available in all communities.
Thanks. Let me ask just one more question. We have some good questions in the chat, but can you explain and kind of walk us through the decision to structure this lending program so that it moves through private financial institutions rather than allowing, the Treasury to kind of grant or lend money directly?
That's a great question. I thank you for that. My preference would have been for us to make the direct loans forgiveness rather than through commercial banks. The Republicans were very strongly in favor of keeping it through the existing commercial system. Recognize that the Republicans controlled the Senate. This bill passed 96-0, so there were compromises. But what we did is we strengthened dramatically the SBA emergency loan and new grant program. That's new. And that's something the Republican was not the priority for the Republicans. So we're going to revisit this. And if we don't find the commercial institutions being fair and where they're giving these 7A loans that are forgivable, I can assure you that this senator is going to be speaking out and acting to make sure we get all communities included in this program.
Thank you. I want to ask a question from Lori Wallach from Public Citizen. So she writes, although all SBA 7A banks were supposed to start accepting Paycheck Protection Plan forgivable loans this morning, the only bank that seems to be doing so is Bank of America, and only for small businesses with existing loan relationships. When will this emergency program, which for many is the only way to continue to pay staff with businesses all closed, come fully online? So a version of what I just asked, but maybe you can say a little more about it, and we can move on to a few other questions, because I think that is a top of mind question given that the program's launching today.
No, I think you're right about that. There are other banks that are writing loans today. We've been told that. So it's not just Bank of America. It's beyond that. But I do agree of our concern of getting more banking institutions writing 7A loans, particularly in underserved communities. And I am concerned that those who have existing relations will be getting their funds earlier than those that do not. So we're monitoring this by the hour. My staff is already looking at these numbers. And if you have examples where you find small businesses are not able to access a banking institution that will write this loan in a reasonable period of time, this is day one. It's not unreasonable to expect it may take a couple of days, not weeks, a couple of days to process the loans before they can disperse the funds. But if it takes longer than a few days, let us know, because we're going to watch very carefully as to whether that delay is occurring in underserved communities or whether there is efforts being made to concentrate these loans in those who have established relations.
Thanks so much. I know you're also very active and a leader on environmental questions with your leadership around protecting the Chesapeake Bay. And I think we have a good kind of cross-cutting question from Richard Lawton, who asks, are there specific proposals to minimize the impact on the growth of the clean energy related sectors like solar, offshore wind, energy efficiency, electric vehicles? I know there was some talk in the negotiations about trying to work in provisions related to climate change and this, huge, bill that's going to restructure and affect so much of our economy. But can you give a little bit of guidance on how kind of businesses can be expected to be supported?
And as we mentioned earlier, we are already working on phase 4, the next bill. I know that Speaker Pelosi, this is one of the areas that she intends to include in the next stimulus package. In the Senate, we worked on infrastructure transportation initiative that had a very strong proponent for the first time on like electric vehicles, for environmental sensitivity on transportation programs. So we are pushing that agenda. I can tell you we are pushing very hard on the Finance Committee on equal treatment for green energy, which today does not have that. So we are going to be pushing these issues. We'll look for any opportunity to get them moving, including in the next package.
Let me share a question from Victor Huang, who's a good friend of a lot of us on this call. Will the SBA authorize CDFIs and fintech firms to become authorized lenders under 7A? They have reach and scale for small checks that commercial banks do not.
It's my understanding that the SBA is looking at this with Treasury. Actually, it's Treasury's call more so than the SBA. That they're looking at that now as to how they can expand the number of lenders. We're looking for the broadest group of lenders, but we want to make sure it's fairly allocated so underserved communities can benefit from this program.
Thanks so much. Another question from Aaron Klein, a former colleague, who's I think at Brookings now. He says, Treasury has decided to require banks to perform anti-money laundering reviews on these small business loans, which could drive up costs, slow down lending. Was it your intention to use this crisis to require America to be checked for money laundering, or do you think Treasury should streamline or adjust this requirement?
We did not include the anti-money laundering as a condition that the banks had to certify. We, in the language of the bill itself, want to make it streamlined as possible. For example, the underwriting is very, very simple. There's really no credit underwriting in order to get these loans. There's no personal signatures required for these loans. These are 1% loans. Again, it can be totally forgiven. So we try to make that, and we provided generous costs for the lender, so that the lender should do very well in making these loans. No cost to the borrowers at all, zero cost loans. So we try to take care of all those issues. Treasury has been very cooperative in the manner in which they set up the program. The one area you mentioned, anti-laundering, was the only additional condition that they put on the loan certification that we did not have in our authorizing legislation. I'm going to confess, I don't know enough about what that means as far as how a bank goes through the anti-laundering provisions. And if that is going to slow things down, we're concerned about it. We want to get money out in a matter of days, as I said already. So if that becomes a problem, we'll speak out. But at this point, it looks like banks are processing loans with that provision without a delay. But if it causes a delay, we'll voice our concerns.
I have another question from Jason Green, who's the co-founder of a company called SkillSmart. He asks, there's much speculation that a phase 4 coronavirus response package would be structured more like a traditional stimulus bill. Could you speak to how such legislation, or what your vision for such legislation would be to ensure actual stimulus awards include small and diverse businesses instead of just large contractors?
Well, first, I believe this package is structured to provide stimulus to workers and to small businesses. The original bill that Senator McConnell proposed did not. As we changed it over that 4 or 5 or 6 day period in which the Democrats held back our support, we were able to get it much more focused on a traditional stimulus package. So the president wanted the $1,200 per taxpayer. That's in the package. That was not our initiative. But the $377 billion for small business was our priority. The unemployment insurance, which has a tremendous stimulus impact, an extra $600, that was our initiative. So it would be more of a stimulus package. So we tried to take this $2.2 trillion package, equal to a full year of federal spending for discretionary spending, including military. We wanted it to be a stimulus. The McConnell bill had no help for local government. We know that local government can help us bring our economy back. We put in $150 billion on a stabilization fund for local government. We provided money for the local education agencies because we recognize that also helps, particularly those children that are in desperate need of the services that normally come with our schools, including nutrition programs. That was provided here. Daycare was provided for the people that are on the front lines. So we did provide in this bill a lot of stimulus, we think, for those that are most vulnerable by the damage to our economy. But on the fourth package, I couldn't agree with you more. We want to make sure it's focused on what can stimulate our economy and bring it back in a fair manner that helps those businesses that are most vulnerable, our small businesses, and helps workers protect their paycheck and the ability to support their families.
Let me ask you just one last question to kind of wrap us up, and then I want to turn it over to Ross. But just very specifically, in the chat and in the Q&A, we're getting a lot of questions just about how and what program and what am I eligible for. Can you help direct the folks on this call, many of whom are small businesses or entrepreneurs or independent contractors, on the best kind of place to find high quality guidance?
And thanks for that question. On my website, which is Senator Ben Cardin website, you'll see an owner's guide for small business to get you through the CARES Act. It really will take you through each of the different routes on the different programs, not only those under the Small Business Administration, but those under the Internal Revenue Service as well. So I urge you to take a look at that. The Small Business Administration has put out a similar guide on their website, and they're updating that on a regular basis. I would urge you to look at that, as does the Treasury have a guide on theirs. But we're proud of the one that's on our website. It was the first out there, but I think any one of those sources will help you. If you have additional questions, just let us know. We'll try to answer them.
Okay, great. I do see questions popping up in the chat about certain banks and having problems kind of navigating the requirements there. So I imagine you will probably get a few questions. So we're grateful for you to provide guidance for how people can get through this crisis. Let me then thank you on behalf of our audience, our organizations, and we are all grateful for the work that you're doing and your time today on a very important day for small businesses. So thank you so much.
Everybody stay safe and let us know how we can help. Thank you.
Thanks so much. Ross, I'd love to turn it over to you. Ross, among many other things, is on American Economic Liberties Project's board. We're grateful for his leadership and advice as we build out this work. He is also, among a number of other things, the founder and CEO of Blueprint Local, which is a new venture that aims to become the premier platform for people to invest in their communities. He's also the founder of Village Capital, which I'm sure a lot of you are familiar with, a venture capital firm and an entrepreneurship incubator that has really been a pioneer in supporting impact-driven entrepreneurs. In addition to that, he also wrote a book, which I encourage folks to pick up, called The Innovation Blind Spot, and writes regularly about the challenges facing entrepreneurs, including from corporate concentration. He is also a venture partner with Access Ventures, an innovator in residence with the Kauffman Foundation, and a member of the University of Virginia Alumni Association's Board of Managers. So I'd like to turn it over to Ross to kind of kick off a conversation and introduce our panelists and kind of dive into the nitty-gritty of what's happening on the ground and what policymakers can do in response. Thanks so much, Ross.
Thanks, Sarah. Really appreciate it. And it's really excited to be with some great panelists. And it's good to see some familiar names on the webinar. Please don't be shy either using the Q&A or the chat box to ring in questions for our wonderful panel. We would love to talk about what you want to hear about. Sarah, thanks for the very gracious introduction, and thanks for your leadership on this and so many important issues facing our economy. It's a privilege to be affiliated with you. So thanks for convening us all here together. I want to transition from the senator's conversation around how Washington is viewing this to the streets of our country. We have three leaders on this panel who for years have been in the trenches supporting entrepreneurs, business owners, small towns, big cities, and in trying to be resilient and successful at the Main Street level. And I want to turn to each of them to give an initial perspective, and then I hope we can turn it over to question and answer and discussion. So I might start with Stacey Mitchell, who runs the Institute for Local Self-Reliance. And I think one of the things that Stacy has been harping on for years, that in a well-performing stock market and low unemployment doesn't seem obvious, but when we hit a crisis is very obvious, is the need for our cities to be resilient and self-reliant. As Stacy frequently says, private equity firms and McKinsey consultants would say it's inefficient having all these mom and pop shops all across the country. Why wouldn't you just have a grocer provide something at lower prices and lower profit margins? And Stacy frequently talks about how nature loves redundancies. I mean, you have two kidneys and you only need one, and it seems inefficient to have two kidneys until one of your kidneys goes bad, and it's great to have that redundancy. And so, when times are great, we're talking about efficiency and leverage and profit margins. When times are not great, like we are now, we really are seeing why it's so important as an economy that we do have redundancy and we do have resilience. So Stacy, maybe you can talk through the last couple of months through the lens of the work you've been doing, for the last decade and far beyond.
Yes, and thank you so much. It's really nice to be part of this conversation. And I just, the stakes of this are huge. I mean, just absolutely huge. We've never seen anything like this hit small businesses in America, at least in any of our lifetimes or memories. I think Ross is absolutely right in the sense that what we're threatened with losing is the resiliency and the ability of our communities to be places that are functional and healthy and can respond to challenges and have the ability to bounce back, and are places that cultivate creativity and innovation and citizenship. All of those things really come from having locally controlled economic capacity to some degree. And for many decades, we've short shrifted that in the context of policy, and we have consistently put independent business owners and entrepreneurs at a disadvantage time and time and time again. And so this is a sector that is already back on its heels in a number of ways in our modern economy and in the context of corporate power. And now hit with a situation that is unprecedented, where we have for local retailers and restaurants and consumer-facing services and other businesses, this isn't just a decline in sales, which during a recession can be, significant and catastrophic. This is in many cases a flatlining and a total loss of sales. The stakes, are not only in terms of huge unemployment. In the retail sector, for example, small independent retailers employ about 5.5 million people. They account for a quarter of all retail sales, brick and mortar retailers. So these sectors are just huge. It's really vast. And the idea of all of those people flooding the unemployment lines, and then what that then does to our ability to restart the economy is really quite catastrophic. But it's the loss of all of this, the potential loss of all of this productive capacity and innovation that we, you can't simply rebuild that. It can be really lost in ways that could affect this country for generations to come, and really affect the structure of society for generations to come, not to mention the kind of corporate power that comes with that. I just, to comment kind of on where we are right now in terms of the policy issues. We in a set of small business organizations, some on this call, came out as Congress was beginning to put together the stimulus to say we really need grants, not loans. And we talked about the scale of that and the speed of that. And, in some ways that, the architecture of the policy approach in terms of being forgivable loans, was an important win. But there are lots of challenges and problems with how Congress has approached this that we desperately need to try to address in the next round. And those are the scale of this program is far too small to the needs. And we're going to run out of money very, very quickly. Our back of the napkin was that we needed at least $1.5 trillion for small businesses in the most affected sectors to cover them for 2 or 3 months. So just, and this is open to bigger businesses in some cases, including chain hotels and restaurants, and just a too small pot of money. And then the other is the other big challenge is what people have been naming, is that we're trying to build this on a really rickety system of the SBA and its loan guarantee programs. And, like a lot of aspects of government right now, where we're all coming face to face with the consequences of not having strong, healthy government bureaucracies that actually function at scale, we are now learning intimately what people who've been studying the SBA for a long time have known, which is that this is not the most effective agency and does not really have the capacity to roll this out well and quickly. We had called for this to be a program through Treasury because it felt like that was a way to get cash out much more quickly. You could sort of reverse the flow on incoming tax revenue. And sort of given the fits and starts that we're seeing around SBA's rollout, I think that we're hoping that Congress will really talk seriously about, sort of a second loan program or grant program that is done through Treasury instead, to sort of spread things out and to create some real capacity. I guess the last just thing I want to point out, since we've been talking a lot about banks, we've heard I've been talking to a lot of small business owners over the last week, and also some banks, and hearing about what people are hearing from banks. And there are a few community banks, most exclusively community banks out there that seem to be on top of this in terms of being proactive and reaching out to businesses they have a relationship with, and being able to at least answer phone calls and help direct people to initial steps. But they're the exception. The banks have not gotten the information that they need, and part of that, that a lot of that is on the SBA and the federal government. But it's also worth noting in this moment that because of the decisions we made in the wake of the financial crisis, we've lost tons of community banks, and they are the primary source of being able to deliver financing to local businesses. Bank of America does very little small business lending. They have very little capacity or success at doing that. It's really the local and mid-sized banks that do most of that. We've lost so many. We now have hundreds of counties in the US that have no local banks at all, and it's increased pretty substantially in the last 10 years. So in addition to kind of thinking about what is the emergency response now, I think it's also on us to begin to think about, well, what is an actual what are the policies that we need to have successful small businesses in the future? And we've got to look at banks and at the SBA.
Thanks, Stacy. Really appreciate the comments, and please ask questions through the Q&A or the chat. We're going to hear from Rodney and Thomas, and then come back and bring it up to a conversation. But Stacy, thanks for kicking us off well. That last comment you made is a good transition to introduce Rodney. One of the things that Matt Stoller with the American Economic Liberties Project talks about that makes sense is one of the organizing principles of the American Economic Liberties Project is there is such a thing as too big. There are institutions and companies that are too big, and power is so concentrated that they are unable to serve the function that they are intended to serve. And Matt talks about the example of phone trees. If you call a company and you have to press 5 to get to this department and press 4 to get to this person, if you can't get a company to serve you effectively with what it does, companies too big to be effective when you really need them. And I think we're seeing that in our banking system. I think probably 80% of the comments and questions I'm seeing are complaints about navigating the process of how I get cash from this $350 billion program. That might, a community bank with a person on the line that you have a relationship with, that was much more likely to happen 30 years ago before community bank consolidation. I will say, as an observation, the national response has been discouraging, but to transition to Rodney, some of the most encouraging responses in the crisis have been local leaders, local organizations, mayors, governors, nonprofits. So Rodney runs Common Future, which is really a movement of local business leaders, nonprofit leaders, community organizers that are trying to take back the economic future of their communities. Rodney, I got to know when he was a community organizer in Baltimore, and then he moved to Oakland to run Common Future. And Rodney, maybe you can talk about what are you seeing on the ground from leaders in your network that's encouraging? And you've actually made a really encouraging decision as a leader of Common Future with how Common Future is going to respond budget-wise. So maybe you can talk about what you're doing to do your part, which I'll let you share your great gesture, because it's incredibly admirable. So, Rodney, what are you seeing, and what's Common Future doing to respond?
Well, I appreciate the kind and generous introduction, Ross. And of course, Stacy, our organization has been connected for some time. As you pointed out, Ross, the most effective, powerful work is done at the local level. And I think what's really being pointed out right now is how we overemphasize particular institutions and do not recognize the inherent ability and capacity of localized infrastructure. And so when I think about the fact that the Common Future Network is made up of 100 plus different organizations that represent themselves, thousands of businesses. These are locally based, community-based, technical assistance providers, entrepreneur support organizations, small business support organizations, that when you're looking at the current response to COVID at the federal level, really does not recognize that infrastructure that exists. And to many of the comments and questions that have been raised in the chat box, really, those are the types of organizations, when we're talking about small business and supporting entrepreneurs, those are the folks that are really directly supporting the growth of small business and the retention of small businesses in this country. And so we're seeing this reflected in the response by Congress, which obviously we understand the complications of rolling out something like this. And at the same time, we have to uphold the fact that there's an alternative infrastructure. And Stacy really articulated that so well about the importance of local. And so we're seeing this in real time, what happens when you actually under-resource overemphasize other types of institutions. And so what we're seeing on our network, nothing that surprises me and wouldn't surprise Stacy or Thomas or you, Ross, is folks really coming together to your point, actually even put their own resources in play to ensure that their businesses are able to be supported, really working to ensure that there's equity and inclusion in this process, which is really something that we need to be really mindful of. One of the organizations in our network, the Boston Impact Initiative, for example, they are a not-for-profit loan fund that really prioritizes racial equity in the city of Boston. And what they've been able to do is they've actually determined that they're going to support their businesses by, one, eliminating interest rates and debt right now, and actually formulating a process in which they can directly support any of the employees that have been employed by their businesses that are impacted. Now, they didn't need the federal government to have the CARES Act to do this. This is something that they were able to do on their own. And so we're seeing those types of actions happen consistently. Connecting it back to even to some of what Stacy pointed out as well, we're seeing right now the lack of protective equipment that is necessary within the hospital system, right? And so we're also seeing a number of folks in our network that are actually leveraging the capacity of maker spaces and other of their enterprises to actually be able to respond in a way that really points out the need for the localized approach. So those are a few of the things that we're seeing in the network. What I do want to bring up though, and as response to many of the questions that have been brought into the chat box and the tenor of this discussion. Now, I'm pretty disappointed that we did not have the opportunity at this tranche anyway for CDFIs and other types of institutions to play a significant role in this rollout. Because quite frankly, when you're looking at the way, we're almost really doubling down on institutions and structures that have already produced pretty significant inequities. And so as an example of that, the 7A guaranteed lending program at SBA, for Black and Latino borrowers last year, they received 3 and 6% of the 7A program. It was 14% for women. And so when you look at that, that means we're doubling down on the inequity that was already being produced by the 7A lending program, right? So that's one thing that we have to consider in this moment. And how do we actually ensure that when this next tranche happens, that we're really ensuring that for African American, Latino, Indian country, for the vast majority of people of color in this country that are driving economic sustainability, creating business, that there's opportunity for them to actually have a fair shake in all this, rather than doubling down on the status quo. And so that's something that I really wanted to elevate in this conversation. It's something that I feel has not been discussed as much as it needs to be. When we talk about who's going to have a greater advantage in this process, we're not really being clear about who really will be impacted. Our friends at Economic Innovation Group had a really good chart, I think it was yesterday, pointing out that the majority of African-American businesses, for example, are younger firms, which means they're going to be disproportionately impacted by financial instability right now. So that's another example of what happens when we don't become very deliberate and targeted as it relates to equity and inclusion. And then the final thing I want to point out, because so much of the work that's happening in our network is really around particular areas, and we're especially again, when Stacy was pointing out, we have a lot of food and farm systems in our network, and a lot of folks that are doing some maker work. And I think this is all calling back to attention of how we need to reinvest into local production. We were seeing the massive disruptions that without local supply chains, when we over-concentrate production elsewhere. And so I think this is a real opportunity for us to reconsider and invest. And the final thing on that point, we also have to acknowledge there's some irony that the big banks are actually being encouraged to participate when, in fact, when we look at the trajectory over the last 15, 20 years or so, there's been, I believe about 40% of corporate profits have come from finance, including insurance. So that also, again, this is an opportunity to really look back and say, how do we actually structure a different type of economy moving forward out of this? How do we leverage this point with federal support to actually begin to see that transformation?
Thanks, Rodney, and thanks for your leadership, and also thanks for stepping up as an organization. Rodney announced earlier this week that Common Future was dedicating about 10% of its annual operating budget to support its leaders on the ground with relief efforts, which I know is a meaningful decision, and we look forward to hearing perhaps in the Q&A or after some of the ideas that you're seeing. I want to turn it over to Thomas to round us out. And Thomas, you've got an incredible range of lenses that you're bringing to this. Day to day with the American Sustainable Business Council, you're an advocate for businesses, but also in your prior role as Chief of Staff to the Secretary of the Navy, you oversaw a number of projects that are disaster relief and recovery, for example, the Deepwater Horizon recovery effort on the Gulf Coast. So, as an advocate, as a policymaker, as an implementer, you have a range of perspectives on this. We could go in any different direction, but maybe I would say, Senator Cardin alluded to already the next phase of stimulus. Maybe I would say, what's been missing in the legislation we've seen, and what are you advocating for? What needs to be top of mind in the next wave that we should be aware of?
Sure, Ross. Let me and thank you for that, and thank you to everybody who's participating. And I'm honored to be on this panel with Rodney and Stacy and you and the American Economic Liberties Project. Let me take your question in a slightly different way. We all know that that everyone around the globe right now is scared to death about their health, their physical health, and their economic situation. And as Rodney, I think, eloquently pointed out, marginalized communities, people living on the edge, are the ones who are going to be most impacted, most damaged, and who need the most immediate help. Having said that, and at the risk of sounding snarky, and I hope it doesn't come off this way, a friend of mine, former congressman, former chief of staff to President Obama, was famously quoted as saying, "Never let a good crisis go to waste." And I think we are missing an opportunity here. We should fundamentally understand that we have arrived at that moment where someone is telling us what we've been doing is wrong, and we need to change the way we do it. And we don't need to simply rebuild what we had. The structure, as I think Stacy and Rodney both alluded to, is shaky. Since the 1970s, greed is not a new attribute of humanity, but since the 1970s, certain individuals were using Milton Friedman to justify greed in the way that said only shareholder value. That's the only thing that's important for business and for corporations. Even the Business Roundtable came to recognize last year that was the wrong path, that we've got to start to take into account every stakeholder, be it the shareholders and the employees and the communities that these businesses are living in, working in, making their goods and providing their services, and their customers around the globe. We're seeing this, and this is a little bit, and I don't mean in any way to diminish what Rodney is saying. Every individual has a role here. This problem is of a scale that I had the good fortune to work for a former governor of Mississippi, which has the not very nice distinction of being first in everything you want to be last in, and last in just about everything you want to be first in. And someone once said, well, what can I do to help? And basically the answer was, anything you do will help. And we're kind of in that situation. But I think at the same time, what we're also coming to recognize is we need a fundamental change in structure, and it has to be not just a national, but even a global response. We can't, everybody is important in this circumstance, and we've got to look out for everybody, and local action is critical, but national and global action is equally important. And I think one of the things that happened over the course of the 70s is we had this awful notion that only short-term profits mattered. Was at the same time we had a political situation in which increasingly Americans were told the government was the enemy. The government was the problem. And now those chickens have come home to roost. We now see that the government that, we have this ridiculous notion yesterday of the president's son-in-law suggesting that the national strategic stockpile was somehow for our stockpile, as if, I wasn't sure whether he was referring to the White House or the Kushner family or, exactly what he was talking about. The stockpile was the national strategic stockpile. It should be available to everyone. On that platform, let me say, we've been advocating, we've been trying to communicate with our members who, like everyone else, are struggling and trying to figure out how this works and how to keep themselves and their employees and their families healthy and safe, and then how to keep food on the table and the rent and the mortgage paid. I think what we're hearing is at least somewhat discouraging in that I think on the House side, particularly the Democratic leadership and certainly the Senate Democrats, I think, are willing to do a more expansive fourth and even a fifth tranche that needs to look at across the board. I think we need to take another shot at health, at paid leave, family leave, emergency sick leave, making those permanent, finally adopting the Family Act. We need work on infrastructure across the board. One of the things, and this is a personal thing of mine, but we sent kids home from school. We told sick people not to go to their doctors, not to go to ERs, and many of these people don't have access or appropriate access to the internet. They can't do Zoom calls. It's great if you're of a certain income level. But if you're a single mom working in some place and you've got 2 or 3 kids, you don't have 2 or 3 devices, and you may not even have internet access. You may not be able to afford it. Infrastructure, healthcare. Clearly, I think there needs to be an additional round, at least one more, maybe 2, for both individuals, individual direct payments, and for help for small and medium-sized businesses that really need it. This focus on bailing out Boeing and bailing out these other corporations, the focus needs to be on the people who create the jobs, the people who are there on Main Street, who are actually the heartbeat of our economy. So those are among the things that we hope are going to be included. Of course, the Senate Majority Leader seems to be the wet blanket on all of this. The good news is, the President and the Treasury Secretary all seem to be sounding like they're talking about another round as well. that's the good news. We'll see. We'll see if their words often don't match their actions. The confusion, the questions that we're seeing, the confusion about, well, when is the loan forgivable? When don't I have to pay it back? Which banks are offering loans, whether this is all going to happen or not, I think is just, unfortunately, an example of, we haven't been told the truth, and we haven't been told things like, look, the program just started today. There are going to be hiccups. It's going to take a while to get this organized. Hopefully, as Senator Cardin said, days, not weeks. But instead we get the feel good talk that, oh yeah, it's going to be ready tomorrow. Well, we all know that's not true. I'll stop there and try to leave some time for questions.
Thank you, Thomas. And thanks everyone. So we've got 10 minutes left, and we've got over 100 of you on this webinar. It's a fantastic turnout. We've got a Q&A box and a chat box. So let us know what you think. If I don't see any questions coming in, I can get us started. Maybe I can turn it back to Stacy. You wrote a piece in the American Prospect that was great on what is missing and what's needed in the response. And maybe I turn the same question to Thomas. I'll turn to you. What should we be thinking about in the next wave?
Thanks. I really appreciated the comments from Rodney and Thomas, which I just thought were great. I was really struck, in listening to Rodney and reflecting on the conversations that I've been having for the last couple of weeks, and sort of what we've been watching in terms of the community level and the state and local government level response, at how much of a difference there is. At the local level, you have just the sort of incredible creativity of entrepreneurs who are finding out ways to still serve their customers, and sometimes little bits here and there. But, I talked to a flower shop owner who, is delivering these sort of buckets of flowers that include like this eco-friendly foam, and you get a link to a video, and you and your kids can watch her on a video show you how to do flower arranging at home, and so she's making a little bit of income that way. And just like the incredible creativity of entrepreneurs around the country, and then also the response from communities and community members who are very, deeply concerned about losing these businesses, and local governments trying to step in with cash grants and cash aid, and everyone having this focus on community resilience and how we're all in this together, and how different that has been from a federal response that has I want to be mindful that we got something out of this bill, and that matters, but at the same time really treated small businesses as kind of like a marginal part of the economy. And we opened up this big $4 trillion spigot of cash for big businesses, and we only have $350 billion for small. And this disconnect between the way that our federal government approaches policy and what actually people on the ground both need and want and are demonstrating in their own actions is really quite striking in this moment. But just to go to Ross's question, I think we have to emphasize scale, and we have to emphasize just the actual scale of the money. We know that, what we spend now is money we save later, right? Like the numbers need to be huge right now, because if they're not, the cost of this and the duration of this in terms of years and even more than a decade of failed recovery is really hanging over us. So really getting Congress to understand the scale of what they need to do for small business is important. And then providing real certainty and significant and easy to access grant money to bridge this period of time when they're forced to close. As I said before, we really suggested that this probably needs to be done by Treasury. That seems to be the best vehicle for doing a sort of reverse flow and being able to also do this automatically. I think some of the comments that have been made about how smaller businesses, more vulnerable businesses, newer businesses, businesses owned by entrepreneurs of color are potentially going to be left behind here as more well-resourced small businesses and faux small businesses get to the front of the line for this money. So what does it look like if we actually think about, Treasury looking at the payroll of small businesses over a 3-month period and just injecting that cash back out? And then we do some kind of check on the back end that says, okay, if you didn't actually use this for payroll, this turns into a loan. But it's initially, it goes out, and it's later that we do sort of due diligence around it. I think that's the kind of response that we need in this emergency moment.
All right, we got 5 minutes left, and I might merge a couple of questions and give everyone a chance to answer with a sign off. So, hi, Victor. Yes, a question. Given how fast changes are happening, what are some big changes that are now possible that we couldn't imagine before? And I'm going to merge that with Jim Davidson's question, which is an idea that is one of these big changes that might be possible. In the interest of not letting the opportunity of a crisis pass us by, is there an opening to nationalize all health insurance companies today, followed by a managed migration to universal health care, providing immediate health security and stimulus by ending deductibles and premiums? The offer to fully cover COVID expenses by some insurers seems like a tepid response. So you can riff on Jim's big change, which certainly there would have not have been a window for that 3 months ago, and there is. Or you can take Victor's question a different direction. Why don't we all close with what is a big change that is possible that you might like to see as a resilient response to this crisis?
Let me start with two. I think one is I'm not sure we can nationalize all the health insurance companies, but I do think we can take a huge step toward a real national Family and Medical Leave Act. I think that is doable. I think it is doable in this Congress, even with this majority leader in the Senate. The second thing is, and I think there's a real opportunity here, and this is a messaging battle, and I think it's partly we can all jump in on it. And that's this whole notion of corporate transparency, corporate responsibility, corporate accountability. Somebody mentioned in one of the questions about Speaker Pelosi's lobbying bill. I think there are opportunities now. People are seeing what's happening, and I think it's an opportunity on the messaging side for all of us to jump on that bandwagon and demand changes in how our economic system is structured to deal with some of the issues that Rodney talked about, but also to deal with the balance that Stacy talked about between big business, small business, and it's small business is really the heart of it. So those are two big changes that I think we could be pushing.
Rodney, Stacy, want to sign us off with a big change you think is possible or would like to see?
I can just be really quick to give Stacy some time. But I would note that I think, one, we should be pushing for as much as we can push in this moment, because who knows what's possible at this point, right? And how this might extend. I do want to say that when we talk about scale, and thank you, Stacy, for bringing that in the conversation again, is that, like Ross, I think about the work of VOCAP, and even think about your peer-reviewed process. Even in this moment, we're turning to the big banks to shepherd through the small businesses in terms of this crisis. Even at rethinking the question of whether or not the big banks need to be involved, right? Because to Stacy's point, there's so few, the business model for the big banks really do not lend themselves actually to being in support of the types of businesses that we're talking about. And yet there's pre-existing infrastructure that we've spoken about today that have been underinvested in. And so many of those things, whether it's sort of like the character-based lending or the trust-based lending that we see at a local level, that can actually be scaled up. And so I think there's an opportunity for us to really lean into the existing infrastructure, but bring really meaningful investment and resources at the federal, state, and local level.
I will just say briefly that my biggest hope in this crisis, if we can come out with something positive from it, is that it will be a reacquainting and a reinvigorization of just the very idea of citizens engaging in policymaking to structure the economy to their own benefit. And that's ultimately what we've been talking about on this call, but it's been something that's been dormant for many years. We have not been doing that. And so this may be, this is our opportunity because the consequences of not doing that are so incredibly visible right now.
Well, thank you all. This has been a privilege to be with you on a panel. Sarah, thank you for having us, and thank you for hosting us. I'll turn it over to you to bring us home.
Sure, I'll just say thanks to all of you again. I think, reflecting on where we are, what we learned coming out of this crisis, I think as a nation is so critical. Like, what is the story that we tell ourselves has happened to get us to this point and the failures that we've seen? And I think that kind of the story for us is so much about the evisceration of the public sector to really step up and provide for the general welfare in the way that we need, and the deference to private economic interests to fill that gap. And we're seeing that kind of all fall apart before our eyes, I think, in ways nobody really ever anticipated, at least not happening kind of at this moment. So we at Economic Liberties want to continue to kind of organize these conversations about economic power and how policymaking is fortifying that among the largest private institutions, or is working to break it down and create a more equitable system for everybody. So I'm grateful for folks who've joined not just this call, but the other 3 that we've had, talking about really core components and underlying kind of upstream problems related to concentrated corporate power, and continuing to have those discussions, and hopefully coming out of this after an enormous and kind of unthinkable amount of suffering that's going to continue to happen, learning these kind of critical lessons and being able to rebuild and restructure our economy and society in fundamental ways. So thank you all, and please do reach out if we can help. We are committed to really learning from this community too, and have been very grateful for all the outreach that we've received. So thanks so much. Take care.